Ray Dalio, the billionaire investor who predicted the 2008 crash, is sounding the alarm again. He says we're on the brink of a massive market shift, one that could wipe out unprepared investors. From sky-high debt to a potential US-China war, Dalio says the warning signs are impossible to ignore. In this video, I'm breaking down Dalio's predictions, what they mean for your money, and the exact steps you need to take to protect yourself. Ray Dalio has a track record of predicting major market events. From Japan's market crash to the 2008 meltdown and the US-China power shifts, he's been spot on. Now he's warning of a major shift that will reshape the global markets. Here's what he sees coming and how to prepare. Look, we all know the US government has a spending problem, but Dalio says it's about to reach a breaking point. Think about it. The US debt-to-GDP ratio is over 120%. That means our debt is bigger than our entire economy. To put that in perspective, imagine maxing out all your credit cards just to pay your rent. That's the situation the US is in right now. And as interest rates rise, servicing that debt is going to eat up more and more of the budget, leaving less for things like infrastructure, education, and, actually running the country. This isn't some abstract economic theory, guys. This is going to hit us all in the wallet. Dalio says we're facing a triple threat that hasn't been seen since the 1930s. First, we have this massive debt bubble I just talked about. Second, central banks are basically out of options. They can't keep printing money forever, and raising rates too high could trigger a recession. And third, we have this insane level of political division and global instability. Think about it. The US and China are on the brink of a Cold War, Russia's war in Ukraine is still raging, and political polarization is through the roof. This combination of factors is incredibly dangerous, and Dalio says it's only a matter of time before it blows up in our faces. Remember what happened when Trump got elected? Or when Brexit passed? The markets freaked out. That's because markets hate uncertainty. And right now, uncertainty is all we've got. Dalio calls it a soft civil war, and it's not hard to see why. Trust in government is at an all-time low, political violence is on the rise, and we can't even agree on basic facts anymore. This kind of instability is poison to the markets. It leads to volatility, unpredictability, and ultimately, lower returns for investors. Chapter 4. The US versus China. This could get really ugly. Look, the US and China aren't just economic rivals anymore. They are now locked in a fierce competition that spans multiple arenas. This is a full-blown geopolitical showdown, with both nations vying for global supremacy. We're talking about everything from trade wars and tech dominance to influence over international organizations and alliances. The stakes are incredibly high, with military buildups and potential conflict over Taiwan adding fuel to the fire. And the stakes couldn't be higher. The economic and military implications are staggering. A military conflict between the US and China would be catastrophic, not just for those two countries, but for the entire world. The ripple effects would be felt globally. But even if we avoid a shooting war, the economic fallout is going to be massive. Industries worldwide would face unprecedented challenges. Supply chains are already strained, inflation is soaring, and the cost of living is rising. A decoupling of the US and Chinese economies would send shockwaves through the global system, affecting everything from consumer goods to financial markets. This isn't something you can just ignore and hope it goes away. The ramifications are too significant. This is the defining geopolitical conflict of our time, shaping the future of international relations and global stability. And it's going to have major implications for your portfolio, your job, and your everyday life. The world is watching, and the stakes couldn't be higher. Chapter 5. How Ray Dalio is investing his millions right now. So, if Dalio is so worried about all this, how is he actually investing his money? What strategies is he employing to safeguard his wealth in these uncertain times? Well, he's not panicking, but he's definitely not sitting on the sidelines either. Dalio is taking a proactive approach, carefully analyzing market trends and adjusting his portfolio accordingly. Dalio is a big believer in diversification, especially in times of uncertainty. He understands that spreading investments across various asset classes can mitigate risks and enhance returns. He's got his money spread across a wide range of assets, including stocks, bonds, real estate, and commodities. This diversified approach helps him stay resilient against market volatility. But here's the key takeaway. Dalio is also loading up on inflation hedges like gold. He recognizes the importance of protecting his portfolio from the eroding effects of inflation. Why? Because he knows that when inflation runs hot, traditional assets like stocks and bonds tend to suffer. Inflation can erode the purchasing power of these assets, making them less attractive. Gold, on the other hand, has a long history of holding its value during periods of economic turmoil. It acts as a safe haven, providing stability when other investments falter. In fact, Dalio's hedge fund, Bridgewater Associates, recently increased its gold holdings by 15%. This move underscores his commitment to safeguarding his assets. That tells you everything you need to know about how seriously he's taking these risks. Dalio's strategic moves reflect his deep understanding of market dynamics and his dedication to preserving wealth. Chapter 6. The dollar's reign is over. Here's what's replacing it. For decades, the US dollar has been the world's reserve currency. It has been the backbone of international trade and finance, providing stability and predictability in global markets. But those days are numbered. The dominance of the dollar is being challenged like never before. China, Russia, and other countries are actively working to reduce their reliance on the dollar. They are seeking to establish a new financial order. They're creating their own alternative payment systems and forging new trade agreements that bypass the US entirely. This shift is not just about economics, it's also about geopolitics and power. This is a huge deal. The implications are far-reaching and could reshape the global financial landscape. As the dollar's dominance fades, we can expect to see more volatility in currency markets, higher inflation, and a decline in the purchasing power of the dollar. This could lead to economic instability in many regions. What does this mean for you? It means that the financial strategies that worked in the past may no longer be effective. It means that blindly throwing your money into the S&P 500 like it's 2015 is no longer a viable long-term strategy. The old rules are changing. You need to diversify globally, hedge against currency risk, and start thinking outside the box when it comes to protecting your wealth. The future of finance is uncertain, and adaptability will be key to navigating these changes. Chapter 7. So, with all this doom and gloom, what can you actually do to protect yourself? First, don't panic. Remember, Dalio's predictions aren't guarantees, they're just possibilities, and freaking out won't help anyone. Second, take a hard look at your portfolio. Are you overexposed to any one asset class or geographic region? If so, it might be time to diversify. Third, consider adding some inflation hedges to your portfolio. Gold is a classic choice, but there are other options like real estate, commodities, and even certain types of cryptocurrencies. And finally, stay informed. The world is changing faster than ever, and the more you know about the risks and opportunities out there, the better equipped you'll be to navigate them successfully. Chapter 8. Dalio has a great quote. The biggest mistake investors make is to believe that what happened in the recent past is likely to persist. In other words, just because the market has been going up for the past decade doesn't mean it will continue to do so forever. We're entering a period of unprecedented uncertainty, and the old rules no longer apply. The winners in this new environment will be those who are adaptable, informed, and willing to challenge their assumptions. So, don't be afraid to think differently. Don't be afraid to take calculated risks. And most importantly, don't be afraid to learn and grow as an investor. Chapter 9. Now you might be thinking, what about crypto? Is that a safe haven in all this? Dalio's stance on crypto is actually pretty nuanced. He sees Bitcoin as digital gold, a potential store of value in times of fiat currency uncertainty. He gets that in an era of rising debt and potential currency debasement, crypto could play a role as a hedge, but, and this is a big but, he's not saying to go all in on Dogecoin or anything, he's still cautious. Why? Because crypto is volatile, the market is still relatively unregulated, and there's a lot we don't know about how it will play out long term. His advice? If you're going to invest in crypto, do your research, understand the risks, and only invest what you can afford to lose. Look, I get it, hearing about potential market crashes, global conflicts, and the collapse of the dollar isn't exactly uplifting content. But here's the thing, burying your head in the sand and pretending these risks don't exist is the worst thing you can do. Ray Dalio's insights are a wake-up call. He's not saying the world is ending, but he is saying the game is changing, and those who adapt fastest will be the ones who come out on top. So stay informed, stay prepared, and don't be afraid to adjust your strategy as the situation evolves. Ray Dalio's insights have been invaluable in the past, and his latest warnings are no different. Stay informed, stay prepared, and navigate the future with confidence. Don't forget to like, subscribe, and hit the bell icon for more updates on global markets and financial strategies.